Welcome to Explain the Charts, where we break down the news and chart data to give you a clear picture of the current market. Today is November 7th, 2024, and we're taking a look at the USDCAD pair. The latest news surrounding the USDCAD is focused on the upcoming Federal Open Market Committee, FOMC, meeting. The market is currently anticipating a potential interest rate hike from the Fed. This could have a significant impact on the value of the US dollar and, in turn, the USDCAD. In addition to the FOMC meeting, the Canadian dollar has been impacted by recent economic data releases. For instance, the latest jobs report showed a slight increase in unemployment in Canada. This has created a bearish sentiment for the Canadian dollar and could be putting downward pressure on USDCAD. Now, let's turn our attention to the charts to see how the price action has been unfolding. Looking at the daily chart, we see that USDCAD has been on an upward trend in recent weeks. The pair broke through a key resistance level around 1.38, indicating potential for further gains. The recent move towards 1.39, however, may be facing resistance, as the price has been consolidating in a narrow range. This consolidation could suggest a potential reversal, but it's too early to tell for sure. To gain a better understanding of the short-term dynamics, let's switch to the 1-hour chart. On the 1-hour time frame, we can see that USDCAD has been experiencing a strong bullish momentum over the past few hours. The pair is trading above its 50-period moving average and has formed a series of higher highs and higher lows. This suggests that the bulls are in control and the upward trend could continue in the short term. However, the price has reached a significant resistance level around 1.395. If USDCAD fails to break through this resistance, we could see a pullback towards the 1.39 level. Let's take a closer look at the most recent price action on the 15-minute chart to get a clearer picture of the short-term sentiment. On the 15-minute time frame, we see that USDCAD has been consolidating within a range, suggesting a lack of clear direction. The price has been bouncing between support around 1.39 and resistance around 1.395. This sideways movement suggests a battle between the bulls and bears, with neither side gaining a clear advantage. The key to this short-term price action will be whether USDCAD can break through the resistance at 1.395. A successful breakout could signal a continuation of the bullish trend, while a failure to break through could lead to a pullback. It's important to note that the recent news events and economic data releases are likely contributing to this short-term volatility. The market is closely watching the FOMC meeting for any hints about future interest rate policy. Additionally, the Canadian dollar is facing headwinds from the recent jobs report, which could be limiting the upward potential of USDCAD. Let's zoom in on a specific range of candles to see if we can find any clues about potential reversals or breakout opportunities. Looking at the 15-minute chart from November 5th to November 6th, we see that USDCAD exhibited a clear bullish trend. The pair broke through a key resistance level around 1.395, indicating a strong bullish momentum. However, the price has since pulled back, suggesting a potential cooling off of the bullish sentiment. This pullback could be a healthy correction before the bulls regain control and push USDCAD higher. But it's also possible that this pullback is a sign of a larger trend reversal, especially given the recent economic data releases. The next few hours will be crucial for USDCAD as the market awaits the FOMC meeting. If the Fed announces a rate hike, we could see a surge in the US dollar and USDCAD pushing even higher. However, if the Fed surprises the market by keeping rates unchanged or even cutting rates, we could see a sharp decline in USDCAD. Let's recap the key price levels to watch. On the daily chart, the 1.38 level represents a significant support level, while 1.395 serves as a strong resistance level. On the 1-hour chart, the 1.39 level represents a key support level, while 1.395 is a significant resistance level. On the 15-minute chart, the 1.39 level is acting as short-term support, while 1.395 is serving as short-term resistance. In the short term, USDCAD is likely to remain volatile, driven by the upcoming FOMC meeting. If the Fed announces a rate hike, we could see USDCAD break through the resistance at 1.395 and push higher. However, if the Fed surprises the market by keeping rates unchanged or even cutting rates, we could see USDCAD pull back towards the 1.39 level. In the long term, the USDCAD outlook is still uncertain, with several factors at play. The Fed's future monetary policy will have a significant impact on the value of the US dollar and, consequently, the USDCAD. Additionally, the Canadian dollar's performance will be influenced by economic data releases and overall global market conditions. It's important to stay updated on both news and chart data to make informed trading decisions. As always, remember to manage your risk effectively and trade responsibly. Thanks for joining us today, and don't forget to subscribe to Explain the Charts for more in-depth technical analysis.